Thank you. Our next speaker is a global climate champion. Dr. Vera Songwe is a senior fellow at Brookings and a leading figure on macroeconomic and debt issues. She was the first woman to lead the Economic Commission for Africa. Her insights have guided institutions, African heads of government, ministers of finance, central bank governors, and international organizations. In her keynote, she will talk about multilateral development banks and their role in the global development landscape. I'm honored to welcome Dr. Vera Songwe to the stage.
Wow, beautiful audience. Good afternoon, and thank you very much for coming. I come to you from Washington, D.C., where I was just telling somebody the other day, on the 28th of December in Washington, D.C., it was 75 degrees, and last week it was -10. And so coming to Norway almost feels like you're coming to a warm place, which will not be the case normally, except that we're living in very difficult times and changing environments. So I want to thank Norad for inviting me here today to talk about, I think, what is a really important subject, which is the future of our planet and where we go and how we deliver growth for the next generation. I just want to talk about the interconnectedness and the partnerships. That's my logo and my design. It's all about that. It's all about us, institutions, people, and ideas coming together to make this work. Money talks. Indeed, it does. And one of the things that I wanted to talk about before we start, we've heard about sort of our ambitions, our hopes, what's happening. But let's just look at what is real. What is money telling us, since this is called Money Talks? What money is telling us is that growth forecast, that our money is not working hard enough. Our money is not being productive enough. It doesn't matter where in the world we are, whether we are in the emerging world, as you can see on the graph, in the advanced economies. The straight line is what growth was between 2010 and 2019, and what it is in the last 3 years. Essentially, globally, we are not growing as fast. Whether it's in the advanced economies, whether it's in the emerging world, even in China, which used to kind of be, our fail-safe. We always used to go back and say, at this China is growing at 10%. We see China, they have revised their growth projections to 5%. So it is a much more difficult, much more challenging growth environment for everybody, not just for the emerging market economies, not just for the low-income economies, but it is certainly more challenging for those who are further behind. The emerging markets and developing economies are actually the ones pulling growth. They're 45% of world growth today, but they're not able to do as much and to make that lift happen as we would like to. That's one of the big challenges, is how can we just get back even to global growth, right? We know that when the advanced economies are growing, the emerging markets grow behind them and the low-income countries follow. So if we are having stagnation in the advanced economies, it is even more challenging for the low-income countries to grow. Second challenge, I talked about it, 75 degrees within 3 weeks, -10 degrees in Washington, D.C. It's the climate challenge. 80% of global greenhouse gas emissions today in the world are emitted by the G20 economy. So the 20 largest economies, the G20, emit 80% of the carbon dioxide that is in our planet. We must be able to solve that, and for that we need leadership. The second graph on your right shows you where we are and where we will be. Under the current scenario, we're going nowhere. We're almost going to hit 2% and above of climate. We know that the Paris Agreement is, let's get to 1.5, which is the green range. The blue range is if we improved a little bit and our national determined contributions were much better and we had better standards, maybe we will go up to 2. But we're so out of it in the, probably getting to the 3% at the rate at which we're going, our current policy scenarios. That's why in the COPs there's a lot of discussions. Well, maybe we should redo the NCQGs. But this is the other big challenge. We just came out of seeing what's happening in California. Insurance companies alone have lost $10 billion just in the 2.5 weeks of burning fires in California. Of course, the United States, there's going to be subsidies that can come in front of it. Insurance companies, $10 billion. The overall cost of it is estimated at about $90 to $100 billion. So climate change is another big growth retarder. The debt is another big challenge. And the debt is not a challenge just for emerging markets, low-income countries. It's a challenge for everybody. 2 or 3 weeks ago, France got downgraded by the rating agencies because it has a debt problem, it has a deficit problem, and it's not growing. The same thing, I think, in Germany, we are suffering with the same concerns about growth. In the United States, which is the fastest growing advanced economy today, it's still not growing at 2.4%, it's growing at 1.9%, 2.4 is the trend in the United States. So even, and as we all know, the biggest conversation in the United States is fiscal policy, is the debt, the deficit, and should we increase taxes? It has its highest deficit in over 30 years. So all of us are in this very difficult sort of fiscal financial situation. And we've all been talking this morning about we need more investment. We need $1 trillion. The report that I had the privilege of writing with Nick Stern says we need $1 trillion every year between now and 2030 to fix the climate challenge. Where is it going to come from if we are in this sort of debt situations? So it makes it even more difficult, and it makes policy and leadership even more important to make that case. Also, debt repayments, and we heard about it a little bit this morning, are going up, and they're going to go up even further. And so countries are suffering, and what do they need to do? They need to find ways of reducing the cost of debt and making sure that they can actually address some of the growing development challenges. Because of all these problems, and I did it deliberately to show you and to speak about them in general, about the global problem. It's global growth that's not happening. It's global climate. It's global debt. Each country cannot do this on its own. We need multilateral systems to be able to come together and work to solve what are the common bads in the world, the negative externalities that we have. We must build in resolution systems. That leads us to the multilateral development system. If we didn't have multilateral development systems in the world, we would have to invent them, because the challenges are so big and they're so interconnected and so linked that we must work together to do that. But then the multilateral development systems themselves need to work better. The India G20, the report that Larry Summers and N.K. Singh, and I think I saw Hans-Peter Lankas in the room on the CAF report as well. A lot of work in the last 3-4 years has been done on what the MDBs need to do. They need to increase their efficiency. I think we heard a fantastic presentation today from Antler, which says that they are able to raise for every donor dollar given $18 of private capital. The development community does not have the capital, but they have the ability to federate, to bring together all the capital that's needed. So a lot of the work on the MDB reform has been about how can we improve the efficiency of the multilateral development bank systems, or the MDBs, so that they can raise the capital from the financial system. If $1 delivers 18, imagine what we could do to get to the 1 trillion. All of a sudden, as you said, we're not doing a lot. You said 73% think that we could raise more money to do this. If you have $1 of development resources raising 18 of private sector resources, we will get to the trillion very easily. So it is possible, but you need to sweat like Ansler and maybe get their resources. We need new forms of capital. We just had Pep talk about debt for nature swaps and blended financing, that we need guarantees that we also need. But to do that, we need to change the system. We need to change the way the global financial architecture works. We heard from the V20 this morning, the president of the V20, that multilateral institutions must, yes, cooperate and make sure that they are able to mobilize more financing, but that the external partners need a voice. Investment needs are increasing. What we know for sure for climate is that as the investment needs increase, we're going to need to disburse more capital. But there is a good story in this graph, and I'll tell you in a minute. The good story is that if we actually spend more today, we will not need as much tomorrow. And as you can see, for the advanced economies, and this is what is needed to reverse the climate catastrophe, if you look at the advanced economies, what they were spending in 2022, it almost doubled between 2022 and 2030, and then it's going to flatline. Look at China. China's moved. China doesn't need to spend more because China has made massive, massive investments. Actually, we are benefiting from cheaper solar panels from China. We're benefiting from cheaper electric cars from China. We're benefiting from better, more hydro and more transmission lines that are actually saving energy from China. So we need to do that, and we can do it better. The next thing that we need to do is to make sure that capital is flowing in the right direction. What this shows is that across all levels of multilateral development, capital is flowing back to the advanced economies and not into the developing world. That is because it's actually more profitable to invest in the advanced economies. And so if it's more profitable to invest in the advanced economies, 80% of the emissions are in the advanced economies, you need to do more. Because just by doing more in the advanced economies, it reduces the cost of the investment that is needed in the developing economies. And so I think the biggest message is really that if the G20 economies could meet their climate targets, and Norway is almost meeting theirs, so congratulations to Norway for setting a target and getting to it, I think the rest will do that. And then the MDBs can follow and make sure. The MDBs, as you see, most of them are still timid on the climate finance investments except the World Bank, and hopefully that everybody can follow the World Bank's example, join the rest of the world in making sure then that this climate development will work. A lot of the money is loan money. We need a little bit of equity, because with equity you also transfer technology, and that is the strength of the MDBs. It's technology, it's exchanging experiences and working well together. So there is a role for multilateral development systems. There is a possibility that we can reverse the climate finance catastrophe, because we have seen the examples of how to do it. We just need to work together in an interconnected world to do it well. Thank you very much.